Hi guys, just hopping on to do an impromptu analysis of a trade that I've just started building, and that is a long on the US dollar Swiss franc. So last week I was actually short the US dollar Swiss franc, and I've been short that since before the Iran war broke out. The thing is, the Iran war doesn't really support a short trade on the US dollar Swiss franc. And as you know, I trade technicals first and foremost. But I do use fundamentals and the macro environment to provide some context, at least, to the trades that I'm in. And so one of my stop losses for my initial entry got hit on my short. I had one remaining, which I decided to prematurely close and take a new position on long instead of short on the US dollar Swiss franc because my trend filter, the MACD, which I have spoken about quite prolifically at this point, was now saying that I should be taking long trades. So let's just have a look at the chart. I'm just going to switch my screen. So here we go. I know this looks like quite a messy chart, but do bear with me. Let's just take a jump out to the monthly chart because this is where I always try and start. So let's start by just looking at the general trend and how it's been for the last few years. Well, going all the way back until 2001. It's been going down, all the way down, and there's only a few touch points on this trend line, but on a monthly chart, 3 or 4 touch points is quite significant. We can't really get a meaningful trend line in here; it would be too flat, and so generally the trend is down. And if we move to the weekly chart, there we go. It took a while to load. We can see that this is our monthly line coming all the way down. And what we can do is we can draw another trend line off that, connecting from this high up here down to these two highs here. So we get 1, maybe 2 touch points, 3, 4, 5 touch points, and then it's broken through it. So this trend line was in since February last year, so over a year now, and it has currently just been broken, and the price has come through it. Let's just delete this trend line for now because it's distracting. It has broken through. So firstly, that's a very big bullish signal. We've been in this bearish environment for all this time. The price is actually broken above the trend line. That's quite significant. The second thing is that the MACD has now turned bullish, and if we move into the daily chart, just correct how that looks, we can see that here's the price broken through that weekly trend line. It's also gone through the 50-day moving average. It's gone through the 100-day moving average. And in order to do that, there has to be a relatively strong bit of price action and trend momentum. So it certainly opens my eyes to should we be on the long side of this trade. It's also meant that we can draw this upward trend line from here, which has got 1, 2, 3, probably 4 touch points at this point. Let's just connect that up to there. So, not insignificant for daily trend line touch points. Moving down into the 4-hour, where I do a lot of my trading. Why it's loading so slowly? We can see the previous trade that I had on, which was to the short side, and that hasn't worked out. We've got 2 stop losses hit, and the price has gone over the top of that trend line. So now we've got in at another one here, and I will show you the entry that gave us that, the candle that gave us that entry. And it's actually on the 1-hour chart, which is quite rare for me, but it's because I'm reacting to what is quite a strong sort of fundamental context, and I didn't want price to get too far away from me, so I couldn't get a good entry on this trade. And just to give you a bit of an idea of what I'm talking about, this article sums it up relatively quickly. The Swiss National Bank will keep its policy rate on hold on March the 19th and through 2026, according to nearly all economists polled by Reuters. So compared with many of its peers, Switzerland faces less risk of rising inflation from higher global oil prices, which are up about 50% since the US-Israeli war on Iran began on the last day of February, thanks to a strong Swiss franc. So the currency has gained as much as 2% against the euro since the conflict started, largely on safe haven demand. With the policy rate already at 0%, the lowest in the world, most respondents in the March 11th to the 16th poll said that the SNB should rely on foreign exchange interventions, not a return to negative rates, to counter further franc strength. The SNB recently underscored that its willingness to intervene in foreign exchange markets has increased. Basically, the action on the franc is going to be muted from here on in for a while. And also, if this war continues to drag on for like another year, let's say, the effect on the US economy is going to be that the interest rates are not only going to stop being cut, but they're probably going to be put up slightly. So this actually will strengthen the dollar. And that means that we've got potential more upside strength for the dollar and more downside outlook, at least muted outlook for the Swiss franc. So fundamentally, I should be long the US dollar Swiss franc. With all of that taken into account, and the fact that we've also got a cross up of the MACD on the weekly, we've crossed through a significant, what was it, like almost 3-decade old trend line. Actually, that's a weekly trend line. We've got a cross up of the weekly MACD. We've got the long, we've got the long bias for US dollar, and the muted reaction of the Swiss franc. Therefore, should be long fundamentally US dollar Swiss franc. We've got a cross up of the MACD on the weekly chart. We've got a crossover of the weekly trend line, where price has gone through that. On the daily chart, we've gone through the 100 and the 50 daily moving averages. And on the hourly chart, you can see that it's burst through all of these moving averages, and it's burst through the trend line. And you can see that it's formed a sort of double top here. And I decided to enter off the back of this bullish engulfing candle here, and get in there. The reason I did that is because if you just look back on the hourly chart on the US dollar Swiss franc, let's just see how many times we get a dip and then a bullish engulfing candle that results in that actually moving price upwards. Here we go. We've got one here, price moved up. We've got one here, price moved up. We've got one here, price moved up. Here, price moved up. So all of these examples of bullish engulfing candles, price never moved down. Here, price moved up and then it came down, but the impulse was up. I'm trying to find some more bullish engulfing candles, maybe even one that went down. As a bullish engulfing candle, price did go up, then it came back down again. So, basically, it's a relatively trustworthy bit of price action. So here we've had the bullish engulfing candle, price has come down again. I think, the civil top probably is an area of weak strength in terms of resistance. So, let's watch it. If we break through that, certainly the sky's the limit in terms of the long. But, we've come up against this 50 hour moving average. We've got the 100 on its way up. But I've got my position on in two positions, and they're going to be tracking this trend line here. So that's my it's about a 4-to-1 trade in terms of risk, reward to risk, reward to risk. Easy for me to say. So we'd be aiming all the way up here. So that's my latest trade. That's my analysis on the US dollar Swiss franc. And I'd be interested to hear what you guys think, where you stand on this forex pair at the moment, and whether or not you think the war will last for another year. If it does, I think that this trade's a good one. I think this trade only lasts maybe 3 months max, if it goes on. But we'll run it for as long as we have to. Anyway, I just wanted to jump on and run over that chart. Cheers, guys.